Good morning. How's everybody doing today? All right, so not much going on here. Market looks like it's rolling over here a little bit on the 60-minute chart. And you can see on the futures here, they hit the 50 MA there and the top of that big green bar. And they found a few buyers. And so the looks of this looks like it can come down lower if it breaks this level here. That being said, I think you have to be nimble in this market, meaning if you're going to trade this from the short side, and I probably will, since it's weak, it's rolled over. I've got an hourly topping pattern here, kind of like a head and shoulders, as you can see, right? Pop up, new high, lower high. Attempts to move up here for the moment have failed to get up above it. So if it can trade below here, it should go somewhat lower, and there is the possibility of a relatively decent decline here. But the way prices came up obviously was super strong, giant wide range bar. Looks a little different on the SPY. We'll take a look, but since the futures are trading 24 hours or thereabouts, a little less than that, you see more complete bars. So wide range bar igniting, up, wide range bar, suggesting the stall momentum. And obviously that has happened, right? Where we've gotten that stall there. And so while this 60-minute chart says, losing momentum here as expected based on the pattern, the wide range bar, and can drop, buyers obviously were super enthusiastic about getting on board here. They just couldn't get enough fast enough, whether that was a lot of short covering. Of course, some of that is after a decline. But there should be buyers here on a pullback. So at what level? Well, you can see the 50 is being used, and which is in alignment with this minor support here. But looking inside the bars, there's really isn't much support. So it should be relatively easy for the S&Ps at least to come down to this level. And this isn't significant support. Whenever you get an advance like this, you really don't have any significant support because there isn't any overlapping sideways consolidations. It's just a steady advance, as you can see here. So, I have a line at the 2800 where there was a little bit of more sideways action and a little breakdown failure and a move back up. And, that could be an area, of course, somewhere in here. But if I wanted to be a buyer, this is where I would be looking for, in this area, because this is the most significant support. Now, that being said, anywhere in here, buyers could step up for whatever reason. And one of those reasons, and why we have to keep an eye on multiple markets, is, relative strength and weakness. Meaning, so when I take a look at the NQs, the NASDAQ 100 futures, and look at the NASDAQ 100, I would look to see, is there some reference point related to it that could come into play? And you can see this has a larger area of support. Over here, there's 7,300, which is a big whole number. 7,400 has basically nothing to the left if this starts to break here. So I would suspect it would go through that. You got the 20 MA, right, where these topping tails are. So it's kind of a difficult situation here. I mean, so rolling over, looking for prices to come down, there's really little to no support until you get down to this level. However, a move like this is one in which, historically buyers could just step up, at any level and get things stabilized. So how do you handle that? Well, you have to have clearly an objective method based on price, as we do. And so let's just say it comes down into this area, which would, let's just say it's in the middle of nowhere man's land. Well, if it comes down and it pivots and retests, well, then that is the concept that we call creating support. And so a W type of a bottom, which could encompass breakdown failures, bottoming tails, who knows? We don't care. We just use our bar by bar analysis to interpret what's happening in the moment in multiple time frames and through other markets to make an assessment as to what's happening. So if this was to break down here, does it continue in a continuous downtrend? Never does anything like this where it comes down here. And that's where, real buyers should want to show up and step up in that area of support. In addition, we keep an eye on our intermarket analysis. And I'm just looking at the Dow there, the same situation, little head and shoulders top, it's going to move down, but one market can affect the other, and why we keep an eye on various markets. But in addition, bonds are down here a little bit, but they're just consolidating. And you can see here through May where bonds were rallying significantly. Well, stocks were going down, markets going down. So you keep an eye on bonds. Now, if bonds were to break down through this level, well, just based on the inverse relationship currently, well, that would be supportive of the market. So going back to the S&Ps, and we're thinking, well, this is where there's some significant support, and it's in the middle of, no man's land, and bonds begin to break down, well, that should put a floor under stocks. So why we just set an alert and keep an eye on whether bonds break down. And if they move up toward the top of this range, and of course break out, well, that's going to put more pressure on equities. So that intermarket analysis helps us even when we're focused on, the index futures here. Well, bonds are going to have an effect on that, as well as crude oil, which now you see the little rally off of the breakdown failure that occurred here. Well, they came up to that topping tail. They're pulling back. And in the room yesterday, we had a little discussion about W bottoms and the best kind of W bottoms. And what I said was the best kind of W bottoms do not have big retracements. Right? So when we looked at a few yesterday, because of the current market environment, they had big retracements, meaning if this low had come up here and then all the way back down, that is not the kind of W bottom that makes the ideal type of W bottom. This is, right? So you've got this breakdown failure here, this shallow move up, this retest. Now, to complete that, we need a bar like this or something like that. It could be a bottoming tail or what have you, but we need something here to complete the W bottom and then the move up, which then theoretically should drive prices up. And if that happens, that is another factor that will help put a floor under equities and get them to probably even rally from there, because this came down as interest rates were going down, bonds were going up, taxes, trade wars, so on and so forth, slowing economy, inverted yield curves, get the hell out of the stock market. And so now this type of price action, if this starts going up, gets traders, institutions thinking, oh, everything's okay. This was just a little scare. So let's get back in. Oil's going up. The economy's going to be okay. And maybe interest rates just start going up again, bonds going down. And then, well, you know it, we're off to new all-time highs with the S&Ps breaking out of this little choppy consolidation and moving up toward the old high. So different markets interacting with each other that you need to keep an eye on to stay on top of what's happening if you're going to be an active trader, an intraday trader. Of course, your stops and management and so on will always, keep you out of trouble for the most part. But as things become a little misaligned, let's just say, through multiple time frames, meaning this powerful move up suggesting higher, this weekly big reversal suggesting higher, but a little too much, too fast. Some consolidation. This is starting to roll over. You better be nimble here, right? And able to adjust relatively quickly because, well, this suggesting it goes higher. If those, as I explained, those markets come into alignment, it's not going to take much of a correction to get things to start moving. The other side is, hey, if bonds break out and oil drops down through that low, equities are going to come down. So you better, as I said, be nimble. You better know what you're doing, be on top of your game if you're going to be involved in here from a short-term point of view. Right? All right. Pullback would be reasonable, logical, but China ready to make a deal tweet. And well, yeah, George, I mean, that's kind of this Mr. Schizo market too. Right? The tweets, the changing sentiment of we're going to get along, we're going to make a deal, maybe we're not. So that uncertainty all has its effects, and look, comes right back to what I said early on. You better be nimble here because things can change fast. So Qs, same story. We look at the futures because we get more complete bars to view, but there's lots of gaps recently. And I said a couple of weeks ago, I said this market looks more like an ADR than a U.S. market, that doesn't have all of these gaps like this. A bit unusual to see all of that, but how the news has been affecting, you can see through the eyes of all of these gaps. But same story here in the Qs. The patterns are going to be the same pretty much. You can see the spiders there, and the gap reversal yesterday, and we had that great 5-minute short under the first 5-minute bars low. Rode that down yesterday for a nice trade, and seemed like a pretty much of a no-brainer to me, and it wound up working out. And transports, we always take a look. They've been underperforming. You can see they're not even near the 50 MA, let alone, not even the 200 or the prior high here. So, they did get a nice weekly reversal. So we need these transports to, as we say, bring up the rear and start showing a little bit of strength here. Otherwise, transports going down, yields going down, oil going down, equities are going to go down. So Russell also underperforming, bigger red day yesterday, and same scenario here. But these markets, why do they bring up the rear at times? Well, because they have underperformed, more choppy price action, they have stronger reference points for buyers to step up. As you can see here, all this congestion here. So we'll see how it all plays out. And so we do update it. Internals, as you can see right here, was an awful lot of call buying yesterday, and I made you all aware of that in the room. I think the number was around 0.6 something. I don't know. It was very low. And even day before yesterday, it was low. So a lot of call buying after the run up, the wrong way option traders, as we call them, or the idiots, buying an excessive amount of calls after a run like that. That's why we keep an eye on it. But still, the strength is explained. The moving average of that closing put call ratio has not reached a bearish level yet, so neutral. Breadth has come up into near the first level of bearish, but you see the speed at which it moved up here. That's a good thing, right? If this moved up like that and this was under zero, that would be a warning, bearish warning. And these others down here, which we typically don't look at that often, but this is a long-term measure of breadth, and this is a longer-term measure of up versus down volume, which you see got to a bullish level down here, as well as sentiment down here near the low. So we really don't have much information here yet from the internals other than what we saw intraday. That said, and that was one of the things, it was like the day before yesterday, that excessive amount of call buying and yesterday's gap up. And even though the futures, the overnight had some support there. My assumption or my bias was that prices were going down through it. It took a little while as we sat through the chop for about a half hour or so before the market moved lower, but everything turned out okay. All right, guys, that's it for me. Let me turn it over to Dan. We got lots of stuff that looks like it's moving around here to take a peek at. Looks like more red than green. We'll see. All righty.
All right. Good morning, everyone. Thanks. Yeah, we have fairly light inventory. We've been closing our longs into strength, trail stopping out. So let's look at opens real quick. In the weekly, we just have this one spider call spread. Gave us a little bit of pain yesterday morning, but we added, and that's it. The swing trader, SKT, we shorted this. It triggered yesterday afternoon. TWOU triggered short. That's a very bearish downtrend. Cron, we're long stock. You know, trying to get a big target here on the nice monthly. That's the cannabis sector. EXR, we have a covered call. And then the solar, we have a long-term trade here in a SPWR, daily, weekly, monthly. I noticed TAN sector gapping up, so still relative strength there. And that's it on the opens. Mohawk, I actually, the premiums are pretty juicy. The 135, 125, way the heck down here is 83 cents. I love the monthly. I'm keeping an eye on this. Nice bear sandwich on the weekly. So this we were in this long term, and this 2-bar reversal stopped us out at a profit. But now you got 100% retracement, and it's back in play. LRCX. Gapping down, 180 way down here. If we can get a call spread candidate. Mattel, it's a bullish gap, 1150 over this consolidation. I put it in this little window where I put you upper right here. Light volume, sloppy, but it's still a bullish gap. TTD. It's climactic sell setup, but it's a bullish weekly and monthly, gapping down to 37. That's a bearish gap under the low of 3 days. That's a call spread candidate. Qualcomm, we had as a put spread candidate a couple days ago, but I couldn't get a good juice. Now it's gapping down 69 bucks. Mark it off. Nothing to do there. Midso, 91 bucks. It's gapping a support, but it's greater than 50% gap into this yesterday bar, which is bearish. KMI, I have this as a core. We're going to see if we can get a re-entry on that. Tesla gapping up. There was some news about it. And what's today? Wednesday. So on Monday, I mentioned that it was a put spread candidate. 222, nothing to do with that. Play had earnings, and it's getting shellacked, $43. Wow, look at this weekly. It's gapping under all of this. I put that in a window here in the bottom right. Will.i.am, I had posted as a valid short, and I even reiterated that in the green trading room into the close. I said, look, it's a beautiful, valid, bearish 1, 2, 3, 4. Now it's gapping under our entry. So, you know, gapping down 50 cents is a big gap, $17. Papa Mike, bearish consolidation. It's a bearish weekly and monthly. This is on my short watch. It's gapping down here to the low 77s. Put that in another window. Travelers has been on my list for 2 days, and it's still valid as a 1, 2, 3. It's a monthly resistance, but if it were to take out yesterday's high, then it's strong. NVIDIA down 148.80. This one we've been watching for a put spread. This is the cannabis REIT beyond 132. So in terms of this 15-minute chart, it's still at resistance. There's still nothing to do there, but if it can go sideways for a couple hours, this could be a reverse head and shoulders breakout in the afternoon. Intel, we covered our put spread yesterday at 3 cents. Uber, actually, it's sloppy, but it's actually a sloppy buy setup if it holds here. Lyft has been a lot weaker. Michael Jackson, the cannabis ETF, CGC, down. Facebook, down a little bit. That's a call spread candidate. Rally to resistance right here, now gapping down. Let's keep an eye on this 30-minute low. There's a call spread candidate for Friday. Google is sloppy. Netflix. We had a nice call spread candidate, and we covered half. And then look at this 15-minute chart. After it started selling off here in the morning, I moved the stop to the day's high. I mean, that made total sense. And it stopped us out at a profit, but then sold off. It's still a candidate for a call spread. Apple down. That's just a day trade. That's not a swing setup. Spiders were down more, obviously. And they're kind of trying to claw back, hold this support area. So Amazon gapping down. This had the biggest run of FANGs. We had a beautiful put spread on this gap day. So let's keep an eye on that for call spread. Q's weaker here, down 52 cents. So the Qs look like a short under the pre-market lows. There's Bitcoin holding pretty well, and you know, could either be a head and shoulders top or I don't know. It's a mess. All right, I'm done. Done a couple minutes early. Anything else you all want to look at? ADS. Yeah, it's 1, 2, 3, sure. Hey, Debbie, hit your drop down so LaDon can see you. Yeah, ADI's 1, 2, 3. So do it under Monday's low. Hey, Debbie, MT Live is dedicated to you today. Trend quality. So don't miss it. ENPH, that's a bullish trend. Rising 20, 50, red bars ignored. That's what I call, you know, getting on board a moving train. That's all. So just you buy the high and pick your stop. I think stop could be yesterday's low, because then if it turned this green bar red, that wouldn't look good. Yeah, we have, yeah, sure, that's a great idea. I like that. Let's look for credit spreads on spiders that expired today, definitely. Well, Qs don't have them, only spiders, unfortunately. All right, look at Ladon coming out of the gate with his love. Beyond is actually perking here pre-market, but no pattern. Yeah, Ladon, that sounds like something you told her on Valentine's Day. All right, sitting back. All right, so it's, you know, we're gapping down. We're in the lower part. We're under yesterday's close. But market, the intraday charts are perking right here. So that's, you know, it's only been 15 seconds. So let's not get too excited.